Welcome to Talk Tickers. Today we're breaking down a really interesting one, Applied Materials. The company just posted a record-setting year, but investors, well, they immediately hit the sell button. So what's going on here? Let's dig in.
Okay, so this is the central puzzle, right? A record year, and they beat earnings, so why did investors sell? On paper, everything looked good, but the market's reaction told a completely different story. So we're going to figure out what's really happening with AMAT.
First up, let's just get into the Q4 numbers. And on the surface, everything looked pretty great. Applied Materials definitely beat what Wall Street was expecting.
All right, let's run through the headlines. So they delivered earnings of $2.17 per share, and revenue came in at a strong $6.8 billion. Both of those numbers cleared the bar set by analysts. So you're looking at this thinking, hey, a clear win. But this is where the story really starts to get complicated.
So take a closer look at this table and focus on that last column, the year-over-year change. You can see both revenue and earnings were actually down compared to this time last year. So this wasn't really a story of strong growth. It was more a story of beating expectations that were already a little pessimistic. And the market definitely noticed that.
And that year-over-year slowdown is exactly where the market put all of its attention, which, of course, led to an immediate and negative reaction.
After the call, the stock, which had already closed down for the day, fell another 3% in after-hours trading. So investors heard the numbers, they heard what management had to say, and they just hit the sell button.
What we saw here was a textbook sell the news event. The stock had rallied like crazy going into the report, so a lot of good news was already priced in. The results themselves were solid, yeah, but they weren't spectacular enough to justify pushing the stock any higher. The expectations were just too high.
Now, to really understand this reaction, you have to dissect the two competing stories that came out of this call. It's the AI bulls versus the China headwinds. You've got management's powerful long-term vision clashing with the market's very real near-term fears.
And this slide really puts that disconnect in a nutshell. On the one hand, you've got management talking about their 6th straight record year and this massive opportunity in AI. But on the other hand, you have the market, and it's totally fixated on the immediate problems, that Q4 slowdown and the big risks coming out of China. And that China risk is a big one. Because of U.S. export controls, China's share of AMAT's revenue has plummeted from a peak of nearly 40% all the way down to about 25% this last quarter. That's a major headwind to try and navigate.
But despite those headwinds, this was the core message from CEO Gary Dickerson. He's positioning Applied Materials as a fundamental enabler of the entire AI revolution. I mean, they're the ones who build the incredibly complex machinery that physically creates the world's most advanced chips.
So what about the future? Well, management's outlook for the next fiscal year is pretty much a tale of two halves.
So they laid out this really clear tale of two halves. The first half of the year is expected to be kind of flat. But then they see a significant acceleration in the second half. And this pickup is expected to be driven by massive investment in high-performance logic and DRAM chips. The brains and short-term memory of computers that are the absolute backbone of AI.
Now, the guidance for the upcoming first quarter came in just a little ahead of what the street was expecting, but the midpoint of $6.85 billion still represents a pretty flat, maybe even down result year over year, and that just reinforced that cautious feeling the market was having.
And that China uncertainty, it is not going away. Management is actually baking in a $600 million revenue hit from export controls for the full year. There's a little potential upside from a temporary rule suspension, but the overall expectation is that spending from China is just going to be lower in 2026.
So let's put it all together. You've got a solid quarter, a cautious guide, and a nervous market. So what's our call on Applied Materials from here?
What's the bottom line here for the investment case? How do you weigh this powerful, long-term AI story against the cyclical and geopolitical problems of the next 6 months?
Here's our prediction for the next quarter. We expect AMAT to hit its Q1 numbers, but the stock's fate is going to hinge entirely on management providing some concrete evidence that that second half acceleration is real. Until then, you should probably expect the stock to just trade sideways. The market is in total show-me mode.
And for that reason, our rating is market perform. The long-term AI thesis is absolutely intact, and AMAT is a premier player, no doubt about it. But in the near term, that combination of a flat outlook and already high expectations just puts a cap on the stock's upside.
Now for our outrageous but plausible trade idea. The pitch is simple. You're betting that management's view of the second half is more accurate than the market's current skepticism.
So the trade would be to look at long-dated call options, say 9 to 12 months out. This gives you time for the first half softness to pass and positions you to capture the upside if and when the market begins to price in that massive second half acceleration. If they're right, the re-rating could be powerful.
And as always, please remember this analysis is for informational purposes only. This is not financial advice.